When I'm in the market looking for new, fast-growing stock ideas, this is how I would usually find stocks that potentially could become the next Nvidia. I know that in the short term, the revenue growth rate is one of the key drivers of stock price movements, alongside news on the company's business dealings. There are a lot of ways to screen for stocks, but this is how I would approach it. I would go to a stock screener and I would look for companies that grew revenues more than 20% in their most recent filings. In addition, I would also filter for companies that this has been true for over the last 3 years. I find this by checking the compound annual growth rate of their revenues. The CAGR over the last 3 years is above 20%. I would usually limit the market cap to between $100 million and $200 billion. Of course, you can adjust this list to suit your needs. This generates a nice list of fast-growing companies. Bonus points for them doing this with positive free cash flow margins. With this list, I can further limit my search to small or mid-cap companies and add them to my watch list. I start researching from the smallest companies to the largest ones because they are more volatile and can produce dramatic returns in a short period of time. I'm careful to not buy any of these companies without further research into why the company's revenues are growing this rapidly and if it's sustainable. The criteria can be altered to suit your needs, but usually this is where I begin my research.